Investors are reacting to several major developments over the past 24 hours. And joining me now is Eric Criscuolo, NYSE market strategist. Eric, thank you, sir, so much for joining us here on this beautiful Thursday morning.
Great to be here, Lance. Thank God it is not snowing. I agree.
Yeah. Oh my God, let me tell you, the snow that we've gotten over the last couple of weeks has been frustrating, but we're here, we're doing the show, we're talking markets, and I want to obviously start with Nvidia. What are just investors taking away from Wednesday's Q4 earnings report?
I think it was what Nvidia has been doing for the past several years. It's been incredible numbers on the headlines. You just mentioned the growth, 70% year over year, just incredible performance from the company. But also kind of largely expected, right? The expectations have become so large for Nvidia, and they keep meeting them, slightly beating them. So that's great. But those enormous upside moves that we saw over the past 2 years, they've kind of slowed down or maybe even stalled just because it's been so hard for Nvidia to actually meaningfully beat those expectations given where they are right now. But all in all, it was a great print for the company. It's a good print for the market. No crazy, no out of the blue, comments from the CEO or no kind of really bad takeaways from the metrics, the internal metrics. So I think the markets are digesting it, and it's basically like, okay, the AI story is still in play, and that's great. Now we pivot to everything else.
So, Eric, we know that Nvidia is obviously the world's largest company by market cap in the trillions of dollars and seems like continuing to grow on a yearly and on a quarterly basis. Can you just tell our viewers why its earnings influence so much of the market?
It's a great question, and we've just seen that it started with just demand for their processors, right? Their GPUs, as this AI building, as these companies started to build their AI models. So that was basically focused on the major tech companies, right? The data center builders, the Metas, the Googles, the Amazons. As they bought their chips. But then everyone realized that, oh wait, this has a lot more legs to run. There is going to be an enormous amount of compute that's needed. So then we started to move into building more data centers, and then the industrial names kind of started seeing a big bid. The ones that actually construct the data centers, the Deeres, the Caterpillars, the ones that supply electricity into the data centers, the landowners, the REITs, and then you kind of came in with all the other ancillary parts of the ecosystem. The memory producers. If you look at South Korea, they have had an incredible run over the past couple of years. And that's basically because of one industry. The memory producers, most of them are in South Korea, Samsung, et cetera. Sure. They're seeing an enormous demand, and that has really propped up that whole entire market in South Korea. So it's really just this spread of spending that's taken over so much of the economy.
So let's pivot now to a couple NYSE-listed firms. That's Mark Benioff's Salesforce, Sridhar Ramaswamy's Snowflake. They also reported earnings. What are investors gauging when it comes to AI disruption concerns, which, look, as we've seen over the last few weeks, those have led to a lot of choppiness in the markets?
Yeah, you hit the nail on the head. It was the SaaSpocalypse, which started a couple of weeks ago, where there was these really big concerns that these new AI models were gonna eliminate the need to actually have software, right? If you could just sit down with a bunch of smart people and just code yourself, a new Salesforce application from the ground up, that would seriously dent the demand for Salesforce's own products. And so that whole sector kind of really took a hit over the past several weeks. Salesforce, Snowflake, they were kind of in the epicenter of things. And earnings yesterday, last night, were okay. They were fine. I think Salesforce and Snowflake are trading around unchanged, plus or minus in the pre-market right now. But there was big concern about what the AI future means for these software companies. And I think for now, what you're seeing is they're okay. There's not a quick, broad change that's going to happen overnight. If anything happens, it's going to be kind of an elongated period of transition. And a lot of these companies like Salesforce, they're already ingesting AI into their business plans. They have a plan moving forward of how to deploy their own AI on top of their proprietary data that they are kind of hosting and holding for companies, like the New York Stock Exchange. Sure. or other companies. And so, that whole business model, though, is kind of changing, and that fear of the unknown is what triggered so much of the selling pressure recently. But given the prints that we've seen, the commentary, it looks like things are at least stabilizing. We've seen software kind of respond positively over the past couple of days. We'll see if that continues today.
So Eric, I do want to talk tariffs because that's been in the news as of late. And earlier this week, President Trump's new 10% tariffs went into effect. How are traders pricing in these latest developments from the White House?
So the IEEPA tariff ruling from the Supreme Court went as expected. I think a lot of the financial markets were kind of positioned for the Supreme Court to strike down in some way, shape, or form what was presented to them, which they did. You saw the prediction markets kind of pricing that in as well. So I think it was kind of largely played out as expected. What still has to be determined is the refunds. How are companies going to get refunds? Are they going to get refunds? What does that do to Treasury issuance? Does the Treasury have to issue a lot more shares? A lot more Treasury bills, which are already issuing a lot of, to pay for these. So the Treasury market, the yields, those are kind of in focus. But then you have, how do we move forward with those tariffs that have been struck down? How do we move forward? Trump still wants them in play. He already put 15% on, like you said, through another avenue. How long can that stay on? What happens to the trade deals that were already negotiated? How does that set us up 5 years from now? So again, we kind of thought we were through this tariff stuff. Nope, we were pulled right back into it, like The Godfather Part 3, right? Just when we were out, they pulled me back in. So there's a lot of uncertainty. As we know, markets hate uncertainty, and that's kind of creating somewhat of this range-bound trading environment that we're seeing.
Well, you said just when you're out, they pull you back in. Well, just when we come in from being outside shoveling our snow, we get pulled right back outside as more and more snow comes. But Eric, I appreciate you joining me on this, fortunately not snowy Thursday morning. Thank you so much for hopping on NYSE Live for a few minutes.
Always a pleasure, Lance. Thank you.